recording. Hey, good evening, guys. Ken at Tortoise Capital. It is the nightly strategy podcast for December 5th, 2021. So we just completed about a 15-hour, 2-day session on the research weekend. And there were 14 presentations if you count mine. And the individual briefings were so good that our consensus was that each of the individual briefings was worth the price of admission individually and separately when you consider the presentations, the Q&A sessions, the additional commentary and support resources. So that's a pretty amazing work. A lot of the lessons learned from working through COVID. We heard testimony from members of a collaboration team that had been working together on automation and research. We saw how their work connected to the individual efforts of other guys that earned their purple belts. Luke and Ken Hump made amazing summaries of the work that they've been doing to acquire the skills. Phenomenal. The systems that were presented, Lisa presented a 16 SQN system for a market type that she hated, sideways volatile. We talked about why that could work. We got a peek into the behind the curtain at the research work at our factory for Jeff and Sonal. We took a peek about what it looks like in the early stages of research and some design ideas for additional research that were suggested that were absolutely eye-opening, like on the route to analyzing the effect of MACD 4 seasons on the effectiveness of the supported spring crossing. Jeff had uncovered a rule set that led to a 70% accuracy in finding collapsing dragons, which is our favorite pattern. Wasn't intended to do that, but that's what came out of the briefing. And then meanwhile, his study on MACD histogram found one that was a coin flip that paid 2.5 to 1. That was pretty cool. Bill Scheit demonstrated his PSAR flip, which turns out to be almost a universal strategy in multiple time frames, a model of simplicity, but also a model of how to conduct a research protocol with simple systems with elegant, subtle reentry rules that were a big hit. Matt Richardson talked his career path change in 2014. He took his first course with us on swing trading and then the blended monthly rebalancing. And now 8 years later, he is moving from a full-time professional corporate lawyer gig to a full-time registered investment advisor and full-time trader with a couple partners in the business and doing quite well. And he kind of tracked his program and how he's looking to explore the use of options. There were a number of options strategies discussed, and with a strong connection to the work Danny has done to optionize the mechanical swing systems. We saw the robustness of the mechanical swing systems as idea generators and research support tools that help us identify critical states that can be exploited with hybrid trading. That was an eye-opening experience for a number of folks, especially when you look at the basic robustness of intraday trading with the supported spring crossing, just using generic candidates from the Dow 30. When you front load that with symbols that are already in a critical state, well, we're waiting to see what the results of that research look like, but it looks very promising. So all in all, it was quite an amazing weekend. And, the good, honest, hard work of people that are just asking good questions and are not afraid to share their ideas with trusted others in a safe, trustworthy space really illustrates the power of potential for change in the world. And that was maybe the most gratifying thing of all. So I posted some insights into the feedback that each of them received in writing from me on their presentations, and which were elaborated on in the feedback sessions they got on film as part of that workshop. So all those resources are being built out. In January, the price to access that workshop goes up to $2,000. You can still get in on the holiday seasonality of that at $1,000, and you'd be glad you did, is all I can say, if you're within the sound of my voice. So, excuse me. But there's no rest for the wicked. I predicted that Ken H., who attended the workshop, and Luke, who attended the workshop, would pile me up with work to do, and I'm not surprised to see that they've done exactly that. So let's go ahead and jump into the work. And Luke, we decided collectively is ready to start expanding his view towards not just CLF, but looking at expanding to IWM, because it offers an opportunity to be liquid, robust, 24-hour trading, and check the portability of his skill set now into the broader index. So here we go with the Russell 2000. There's a Kata 2 on the weekly that has now brought it into this tight sideways quiet channel. There was almost a fake one go to, and it has landed in a critical state here at the bottom of that stack that is ready to go. It's already gotten below this Z3 line, but it held this price level for 3 days. So if that holds, it should go. Now, you look at the futures, it's already up 1.2%. So that allows for a target back to here. That kind of move with support, strong support here. And if you look at this as the size of the risk box, wherever that thing opens, and it might open up in here, you put that risk box on it and watch it go with the hybrid frog. And then we're going to check to see if the CLF skill set applies to IWM, and it should. We're going to learn how to do that. So good trade in a critical state for IWM, and looking forward to Luke's work on developing IWM skill sets. His trading journal was a marvel. I just got to tell you, people were speechless. All right. Ken H. and Luke, you were both there. Did I tell any lies about that workshop, or was that basically simply amazing? Yeah, I think you're right. All right, so here is KRBN, and this is from Peter. And this is, let's see. So this is weekly, daily, hourly. Okay. Global carbon ETF. Okay. And then terminating in a doji. The color code is odd here. To me, Pete, this is blue and green. I think you're meaning to go long here with the second position on the Z3 breakout, I think. So I'd expect to see those kind of as like a green line. And this is kind of the line in the sand. If it breaks below this VWAP collection here, I would say, yeah, that makes sense. Yeah. So we're looking at this as the risk box about 18. It's about $1. One scoop, two scoop, and not really. We'd have to be if we play this one long from here. We're front running this, so I might put half the position on here and half if it gets through that peak. You really want to see it get above 49.5 before you get the full Monty on it. So I think you could take half a position in here. That's an obvious short. And then a second position, I think there. Like, I think I'd get short here. I don't think I'd add a second position there. I think I'd wait for this to get the second position short. And then I like that for a third position because it's breaking the Z3. And it would be breaking this line too. Yeah, I mean, I think the downside is easier to see, but the upside, it's an all-time high and clearing. The problematic part of this is that it's already kind of rolled over on the weekly. And so that, yeah, I think that thick green line is that's a pretty key price. Like that's the speculative move. As long as it's above that, the upside bias from here, you're thinking to the short side. I like that. Looks good. Here's Luke with CLF. So it's stuck down here at the weekly support level at the RL10. So it's poised on a knife edge, ready to collapse in a big way, all the way down to 1550, because that's the next serious support level here. You might argue that could be something halfway, but if you're short here, then it probably blasts right through that. And that leaves the upside to get back to the Bollinger Band mean here, top of the river there, on a very tight risk that gives you 1, 2, 3, 4, 5 to the upside. This feels like it's already trying to make a turn. So I'm liking that. Let's see if we can't zoom over in on this guy. And yeah, this is solid support in here. You wouldn't be surprised if it could hold this line. Like if that acted as support and then broke out to the upside, you wouldn't be surprised by that. And then you want to see it get over this. That's a good place to get a second position because it will have cleared that resistance level. That looks good. And then the downside is easy to see because if that collapses, this thing just drops like a rock. So it looks good. Cliff, it's ready to rock. Silver. Strong support at the RL10, right where, or the RL10 turn where you'd expect. And the last time it made a strong run to here, that's a 10% move. And you got a really tight stop in here. And the recovery has already started to happen. That's just a continuation above the Bollinger Band mean, which would then start to turn. And then it should be able to get to the top of this before the question is put to it. Is it really interested? I mean, you might get some resistance here. I'd be ready to cash that position. But the real test comes at 2180, because if that breaks, then it should zoom right through that open space. There's no resistance there. And the short from here will be large, because that has already failed once. TX, the steel company, has already started to make the turn on the weekly and the daily. So this has already cleared these two humps. So there's already a nice leg up. That's really the second leg up already. So now you're betting on the third leg to get to here. And that's really what the test is. Does it resist and fail? If so, cash it. Otherwise, add a second position here. And then it gets through the rest of this gap price pretty easily. And then the next resistance is 46. So that gives you a really strong move to the upside. And then if this fails, you're playing to capture down to 37.50. And then second position short if it fails below there. US Steel. Sideways volatile kind of market here. It's already rolled over once, and it's sitting right in the middle of that trading range, perfectly postured for a big move in either direction. That's what a critical state looks like. And the last move Friday was up. So you would think that it could close this gap to 25 pretty easily. If it can get through that little bit of resistance, then you would expect to get to 26 pretty nicely. So that's plus $2 from 24.27, and you're only risking about 30 cents. That looks good. And then the failure below 23.50 is a big fail down to here to 21.50. So perfectly postured in the middle of a sideways volatile. And that was the system that Lisa briefed, was how to trade the sideways volatile market. Very compelling. Very compelling. Next up, Microsoft. The rollover and resistance has already occurred and brought it back to this level, where it's kind of testing that gap. You know, it rebounded nicely already, but if this fails, you want to be short here, because then it should get to 314 pretty fast, because that's mostly open gap. The support level isn't until it gets to about 310 or 308. So I think you do want to be short from there, but the long side rebound is nice to get back to 340. That's an 8% upside, and that gives you a nice trade frame box, and off it goes. I think you want to wait to 340 to get your second position in. Pure Storage. This is one of those ARC inquiries, and you're getting that that nice compressing triangle in an uprising market with higher lows at every time. And now I think I'd be like right here, to be honest. I think I want to get it right away, and then look at a second position above here. I want to get that sooner. Like as soon as it breaks that rising or that declining highs, that's an indication it's going to break. So I think I'd try to get my second position there. And then the short side, if that fails, then it comes back here to 27, and each of these is successively weaker. I think I get my second position here at 30. Johnson and Johnson, the support that had held only got halfway up the stack instead of all the way up the stack. It only gave you half a retracement and then failed. So that rejection of the higher prices is what causes the RL270 to roll over. And now the downside is very easy to believe in. Like if that collapses out of here, bang, down it goes. Second position here, that'd be good. I like the upside because it should get to say 163 area pretty easily, and that gives you plus $4, and you're only risking 2. So that's 2 to 1. Good enough to trade. Moderna. I'm on team Moderna mostly through that second booster, but it had me suffering yesterday and Friday, boy. Nice support level, higher low. That's your Kata 2 kind of entry that took it all the way up to here. But now this little sell off, but now it holds support. So it's right in the middle. This is perfectly postured for a strong move in either direction. And this is what we want. And we talked about that a lot this weekend, what we mean by a critical state and why it matters. That was worth the price of admission, among other things. So nice breakout is framed in either direction. That should be a high priority play for you. Next, Coca-Cola has come all the way back to that critical support level. It's already rebounded once nicely from there. Notice how it took leg 1, Kata 2, leg 2, and then the collapse. And now it's held support right where the last time that it held, and it's put in 2 days of recovery already with nice higher lows. I think I'd be ready here. And yeah, I think I'm ready to go and then go to 54.50. I think I'd do a second position there because you're front running that gap, and it should be able to get to 55.25 pretty easily. But the real test for longevity will be getting through, call it 56. Downside is very easy to see too. See as well. Everything's in this condition right now. Walmart with a triple bottom here of support, and it's making the hook. And that's the continuation pattern. And it should get to here and here. If this is going to be any judge of it, it should be able to get to 143 pretty easily. It's a good trade. And then the failure is just absolutely easy to see. Lower highs, lower lows. The failure is the trade you want, but it's a great American company. So if that holds, this could actually be a Kata 2. So that's a perfect critical state as well. Nice work finding that one. Second position below here, I would trade that as one position. And then I want to see evidence that it's collapsing before I get short that great American company. But here is a support level, a resistance level, I would say. Here's another one. Here's a third one. So I think I would wait. No, I think I'd get my second position. I can't draw a straight line here. I think I'd get my, let's see, so from long one here, I think, yeah, this one right here, because you want to see it get through that and actually see the next move happening. And that's good for a one position trade. And that gives you one risk, 2 units of reward, and then you get 2 in hand when you make your second position. I like that one. Caterpillar, America. Target, better than Walmart. The Kata 2 is in effect. Critical state. Second position at the Bollinger Band mean. Third position above the peak of the RL10. That's a no-brainer. You got the Kata 2 kind of already happening. So that's the breakout. Looks good. And then the downside's just easy to see. I think I get my second position here at 240, 242. BDRY. Nice recovery underway. 1, 2, 3 on the weekly. Hard to trade this one intraday. But I think, yeah, it's outside. It's just breaking out of the river. I think that's legit. And then the downside would be, if this thing just comes back to the Bollinger Band mean, that's a $4 move on about a 50-cent risk. So I think you got to like that one. That's a great looking critical state. It's right where it collapsed the last time. Bam, that's what you want. But then the upside is also immediately obvious to get back to the Z3 and RL270. Critical state, Adobe. There was your big sell-off. Earnings problems, but it held support once, twice, and recovered nicely going into the weekend. Why not? I think I would put my stop at 610 so that I could get a smaller MMRB. And we heard a lot of good reasons why this weekend you want that smaller MMRB, because you would get out of it here anyway. So don't even worry about that piece. That's where you want to get short anyway. And then the upside's easy to see, just getting back to 644 at the Bollinger Band mean. Nice frame. And that's everything. I was taking a look at the futures here. S&P, the Dow was even stronger. NASDAQ's even up. The Russell is just loving it. Strength in oil and gold. This is looking good for a strong opening and some buying on dip opportunities. I think that should work. Yeah, silver is very hard to trade intraday in the ETF. That's why we like SLW, Silver Wheaton, or Wheaton. Yeah, Wheaton Precious Metals, WPM is better because you get the much more volume and much less slippage. Not as narrowly tied to silver, and they're a great managed company. So WPM, Wheaton Precious Metals, give that a look. All right, that's everything we got. We'll get this published and posted after we get the other. I'll probably upload this before I get the other workshop videos posted because it's a lot smaller. Okay, take good care, and we will see you tomorrow. Ready to rock.